The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 29th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call the power of focus. But first, what is your outcome for the day? What is your outcome? Write that down. And if you don't know what it is, create one. Create an outcome. So the power of focus is really the ultimate power. And focus can and will change the way we think, the way we feel, and change what we do in any given moment. When we change our focus, we change our lives. And when we change our focus, we determine the direction that we're going to travel. If you want to achieve a more fulfilling life, then consider these 4 steps. These are the 4 steps that I use. Step number 1, write down 1 or 2 things you often focus on that make you feel stressed or even overwhelmed. You see, the first secret to creating change is awareness. And this step allows us to find out what we are currently focused on. And that's important because these things provide us with typically no benefit, as they're mainly things that we fear. So you're going to write down 2 or 3 things we often focus on that make us feel stressed or overwhelmed. Number 2, write down 1 or 2 things that you are doing today. 1 or 2 things that, quite frankly, you don't have a real sense of purpose for. You know, things that don't really juice you up, or things that you are doing today that won't really help you achieve your outcome. The reason we need to do this is because there's one thing we all have the same amount of, and that's time. The universe has made us completely equal. No one gets an extra second. No one has a time advantage, and that makes us equal. But most people will tell you they don't have enough time, and therefore the way to get more time, which is really just emotion, and therefore the way to get more emotion is to get rid of the unnecessary things that steal our time. Step number 3, write down 1 or 2 specific outcomes or results that you want for your life, or at least for the day. Things that if you were to achieve them, well, they would provide you with a sense of accomplishment. The key is always to focus on what you want. Lastly, write down what it will cost you if you don't take the time to do these first 3 steps. What it will cost you, what it will cost your family, your friends, your coworkers, your career, things like that. Better yet, let me state this in a positive way. Write down what you could have if you did achieve your outcome or your outcomes. What are all the things that you could provide to everyone in your life if you achieved those outcomes? These are the 4 steps to design the life that you deserve. It's really that simple. They are, again, 1, what are you focused on that stresses you? Number 2, what do you do during the day that doesn't help you attain your outcome? Number 3, what are the outcomes that would change your life? And 4, what will it cost you if you don't achieve your outcome? You see, the ultimate power in life is the power of focus. Well, let's go focus on these markets out here. And let's go check out their outcome right now. Dow futures off 156 points. Are trading out at 15,720. ES Mini off 18 points. It's trading at 1770. NASDAQ futures down 37 points. They're trading at 3464. Russell 2000 off 12 points. U.S. dollar index up a couple of pennies. Not a ton of movement. Only the Japanese yen has got the largest amount of movement in it this morning. Maybe the South African rand. Goldilocks, a hard currency, up $16 right now. It's trading at $12.67. Silver is up 40 cents. That's up a little over 2%. It's trading at $19.91. Light sweet crude back 68 cents right now, trading at $96.75. Natural gas up 11 cents, up 2 3/10%. I saw some pictures this morning here Maybe you saw them as well, that little interchange, what do they call it, the spaghetti interchange or something like that, over in Atlanta. Wasn't a whole lot of movement there. They've got snow on the ground. I do remember being stuck in Atlanta one time when we got a little ice storm. And, yes, people don't know how to drive in that, and they stay home. So they are quiet in Atlanta. Maybe you're listening in if you are in Atlanta. If you are, just stay warm out there. If we take a quick peek around the globe, see what went on last night. Talk about a difference out here. You got the DAX is off 160 points. That's down 1 7/10%. The FTSE off 83 points. That's down 1 2/10%. And over in Asia last night, partying, I suppose, on the news out of Turkey. Who knows what it was, but 403 points to the upside inside the Nikkei, up 2 7/10%. The Hang Seng and the Shanghai, they also were partying last night. The Hang Seng up 180 points, up 0.8%. The Shanghai up 0.5%, a little over 0.5%, up 12 points. So let's now go check out our markets. What are they doing? Well, futures are down pretty hard. If we start off, let's take a look at the ES Mini breaking all kinds of hammer candles out here. The hammer candle we were talking about that it most recently broke is the one that took place last night or yesterday morning when we were coming on the air at 9 a.m. The low of that hammer, 1775.50. We're at 1770 right now. Broke a hammer on the way down. There was this little hammer candle that did form here at about 7 o'clock this morning as well. That low was 1783. So you've got some major selling pressure. Right now you've got the ES Mini making a 100% move of a move, getting all the way back down to the lows from 12:30 in the afternoon on January 27th, doing it in the extreme oversold condition. It says we ought to see the market take a little bit of a cooling off here in the not-too-distant future, and I do mean within the next hour or so. We'll see if that is the extent of the move to the downside for the time being. Just before we were coming on the air, let's take a look at what they actually did last night. I was just trying to identify and draw a new descending price channel out here. Let me just get rid of this one line. But let's go take a look at what actually has taken place overnight. Number one, yesterday, when we were on the air, I think we were taking a look at the ES Mini on the 30-minute chart. If not, if we take a look at the A to B equals CD to the upside, the 8-point on this was the A that I'm using here for the A to B equals CD. That took place at 5 o'clock in the afternoon, January 27th. That was the low out there at 1770.75. That's your 8-point, your B point. This little doji at about 5 a.m. on January 28th, 1786.50 makes a retracement into that hammer candle right there, that low at 1775. That was yesterday morning's hammer. A to B equals CD. In this case here, and, I mentioned that we would see a bounce yesterday. Well, we most certainly got that. In fact, if you take a look at the ES Mini, it just simply gradually moved all day long up along the C to D leg. The angle of the A to B, the angle of the C to D, it was just continuing to gradually move along, and then boom, right around, 5 o'clock or so, you had the news out of Greece, the way that Turkey out there, the way that they were going to simply raise their interest rates quite substantially. But let's not really talk about that. Let's just take a look at the action of the market. And we saw the futures truly take off, and they completed really an exact 1 to 1.618, A to B equals CD. You do know if you've got the art of timing the trade, your ultimate mastery trading system out there, you know that when you do a 1 to 1.618, A to B equals CD, oftentimes you're going to do something different, of course. In the case here, it's a 30-minute chart we're looking at. It works like this on all time frames. So what the market did was they completed that, because 1801 is the actual 1 to 1.618. It got to 1801.25. You got to like that. Now, what did it do? It moved into the overbought condition, just simply worked its way off, worked its way sideways. It was also, it never made the 0.618 retracement. It never made that move, but really close enough. That would have been at the 1804 type level, based on a swing point that I'm using out here at about 10 o'clock at night from January 23rd. Nonetheless, right now, what is going on? We're making, at least in the ES Mini, we're making 100% move of a move. Oftentimes you do that, especially now getting into this extreme sold condition. Maybe we're just simply going to see a market that just starts to move sideways a bit here But that's what's going on inside the ES Mini. Let's take a look at the other futures contracts as well. Let's go see what we've got. Well, let's go see what we've got going on inside the Euro Yen out here. Let's take a look. This is the daily chart. So I'm just kind of showing you some of the core charts here that we take a look at. Then I'll go back and we'll take a look at some different time frames. But here is the culprit. It's the Euro Japanese Yen. This thing here had formed this little... it wasn't really a Gartley pattern out here or anything. If you're watching this on TigerTV, you see a light blue area. All that this really was representing was a significant area of resistance inside of the Euro-Japanese yen. That took place on January 23rd. That was a 0.786 retracement of a set of swing points. That set of swing points being the January 16th high down to low on January 20th. And it was a 0.382 retracement from the actual high out here on December 20th. December 27th, I should say, all the way down to this low on January 20th out there. That we get two Fibonacci numbers that come together. In this case here, retracement numbers. This looks like it's actually setting up a large A to B equals CD down. And that alone would put significant pressure, significant directional pressure inside of the markets. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, Dow Futures off 140, S&P down 15 points. Let's go check in on the metals marketplace out here. We've got gold is up 15, silver's up 34 cents. Let's start with silver out here. Now, I've got a 30-minute chart up on my screen here. Looks like silver should try to make its way up to about $20.06, right around that level. Now, at about the $20.06 area, we ought to get some type of information as to whether or not it's ready to try to move up to the next level. That next level is where it would really begin to try to break out of the consolidation zone. We'll put up the daily chart on my screen, but that consolidation zone right around the $20.64 level. But what we can see here on a 30-minute chart, we see a little bit of a downtrend price channel that silver has been traveling in. Now, this is on a 30-minute chart that we are looking at out here. Let me just try to actually put two charts on the screen at one time. Let's do that. Let's put them side by side to make it maybe a little bit easier to see what's going on inside a longer time frame, what's going on inside a shorter time frame, so that we can see that, just kind of compare what it is that we have that is going on price-wise. So on the right-hand side, I can just shorten this up a bit and give more space to the 30-minute chart out here. So if you're watching us on Tiger TV, what you are noticing on the very right-hand side of your screen is the daily contract. This is the continuous contract for silver. The red box that we are traveling within, the red box is your consolidation zone. So the top of the consolidation, we're going to say, is right around the $20.50-ish mark out here. It's about a $2.30, $2.50 sideways consolidation trading range. Now, it's been trading in this range here really since you'd have to say November the 19th, when the consolidation began. Now, inside the consolidation, there have been a number of different patterns out here. Right now, what we're focused on is the 30-minute chart, which is the chart on the left-hand side of the screen, and that shows us a little bit of a descending price channel. During the break here, I just used my primary trading range tool, which goes out and tries to identify the areas of price where we have the largest number of co-located opens and closes. It's using the body of the candle versus the wicks versus the extreme emotions. And at $20.06, right in that area, give it a few pennies up or down from there. But right in that range is where we happen to have the largest number of co-located opens and closes. We'll see if that area, if in fact silver can get up there, if that in fact acts as a little bit of a resistance area. And the 30-minute chart here, let's go take a look at the relative strength and see what we will see out here is that silver has punched up into that extreme overbought condition, that extreme overbought territory. Now, that's usually in the 14-period relative strength indicator out here. What happens the last couple of times up here into that level? Well, and a nice wide-ranging bar, in fact, a much nicer look to the 30-minute chart that took place at 5 a.m. on January 23rd. Nice wide-ranging bar out there. There were 3,300 contracts during that time frame at 5 in the morning. This next wide-ranging bar that we're looking at right now, 5,500 contracts. That was during the 9 o'clock session out here. Nice wide-ranging bar. Says that the market really shouldn't end on that. That says to me we ought to see silver, high-ho silver, try to get up and test that $20.06 area. You see, when I utilize this tool and I put these little horizontal support and resistance areas, these primary trading range boundary lines, the darkest line out here, which is just navy blue, just a little bit thicker, that happens to be the area on the chart that has got the largest number. So that's your largest area of support or resistance. We'll see. Now, because of that descending price channel as well, we really have an intersection of price right in that $20 and 6-ish cent range out here. But again, we can see it's on the 30-minute chart. It's in the extreme overbought condition. In the case of silver, while it's been consolidating out here and while it's been in this little descending price channel, we can see the last time up was around 8 o'clock in the morning on January 24th out here. And what did it do? Price moved all the way back down to the bottom of the primary trading range area that it's traveling in, which is $19.48 out there. And we'll see. Now, that's an important area, and I'll go ahead and point this out. I think our man Z in the den had either posted earlier, or I saw a little email, he identified a 3-drive to a bottom pattern. I don't know what time frame it was that he was using it on, but here it is. This was as silver was making a bit of a low out here, and that 3-drive to a pattern. We'll go check it out both in the case of time price and in the case of time. That first drive that we would use is the low that came in at about 1 o'clock in the afternoon. That was on January 24th. Oh, I grabbed the wrong tool. Can you believe it? Let me see if I can do this here quickly before we go into the bell. Now, it looks like that 3-drive maybe just formed a few bars later than it should have. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 130 points, trading out at 15,797. S&P down 14, trading at 1778. Composite trading down 35 points at 4,063. Russell 2000 down 10 points at 1128. Apple off $1 this morning. Microsoft down 22. Google off $11. Lead the charge to the upside. We got Medivation. MDVN is a ticker symbol, up a nice 13% this morning, up $10 and change. Jones, Lang, LaSalle, JLL is a ticker symbol. They're up 6% this morning. Out with numbers. The net income on they produced was $147 million versus $107 on revenues of $1.5 billion versus $1.25. So beating top and bottom line. You've got the Dow Chemical out with numbers as well. They are up a nice 6% this morning, up $2.40. To the downside, you've got Triumph Group, Inc., just like the beautiful cars. TGI is the ticker symbol. They were out with numbers. Let me see here if I can find their profit. I know it declined. I don't see the actual numbers here, but they're down 17%. We'll take a look at that. Google's off 1%, down $11. Commvault Systems, CVLT, down 14%, off $10 and change. Biogen, BIIB, off $8. That's not something you see every day. A stock that's off to the moon. Siemens & Company, Siemens AGSI, down 4% here this morning, off $5. You've got Tupperware Brands. They are down 5%. They generated net sales of $717 million versus $711, so they beat the top line just slightly. Net income was $89 versus $74, so Tupperware must not have great guidance out there at the moment. All right. Dow futures, forget the futures. Dow's off 149 points right now. So let's go back in. I'm going to kind of switch gears here just for a moment. Let's go see what's going on in the markets and the areas that we want to be paying attention to. If you're watching us on Tiger TV, you see 4 quadrants on my screen. If you're listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. I'm going to describe what it is that we're looking at. In the upper left-hand corner, we've got the ES Mini. Number one, the first thing we're going to take a look at is a 30-minute chart. And there was a relatively significant low out here. This is a low that we've seen January 27th, so 2 days ago. We're going to take a look at that low. I'm going to draw a line across the bottom of the screen. That level is 1767. So it's the futures that we're going to take a look at. So it's approaching that 100% move of a move. We're still inside that swing point right now. So we'll see that level get tested. In the extreme oversold condition is where it's at. In the relative strength indicator, you're down about a 15 level, can still push lower. But that's about to make a 100% move of a move. If we take a look at the Dow futures, that's in the upper right-hand corner. The Dow futures here, let me pull this off. This is a 30-minute chart that we're looking at, but we're going to get some pretty decent feel as to what's going on here. The Dow futures now really below. They're below a couple of things. Number one, they're below the low at 1230 on January 27th. That's going to be a black line going across my screen. Now, we're still into that trading session right now, so we'll see if this area here is going to hold. You can see it's truly in the extreme oversold level. There's also kind of like a triple bottom move out here, so we'll want to be watching this area because it's another black line I'm putting across my screen. It's the area that actually held back here at 12:30 in the afternoon on January 27th. And that's going to be the low that was put in at January 26th out here at about 6:30 in the evening. That was out at 15,744. So we're going to be paying attention to that area as well. This is going to be important for us to watch. Then we're going to do that during the next hour and a half, that I'm on here. Now we're taking a look at the NASDAQ futures. Let's go ahead and get rid of, I won't get rid of that stuff. Let's just take a look at what it's doing right now. We'll explode the screen up. So the same low. Time-wise, this is at January 27th. This is at 6:30 in the evening. That low out there, 34.65.75. You can see that's an area right now that is also being tested. You're in the extreme oversold condition. So let us, we'll continue to check in on these, especially here during this next 30 minutes, a 9:30 to 10 o'clock session. I deleted that chart. Can you believe that? How the heck did I do that? Well, easy enough to go ahead and put back up here NQH4. And we'll be done with it. Just put it on a 30-minute time frame. Maybe I'll be fortunate enough and it will show back up. No, of course not. No, of course not. Well, I got one little other possible trick. Let me see if I hit undelete. There we go. Okay, I don't know if it actually, I think we got it in there. So let's just go back and draw that line in the sand. And the reason why we want to do this is because markets often make a 100% move of a move, and then they do something different. So we're going to be paying attention to that. And that's why we're drawing these lines in here during the market open. Now, there is one other area, and then we're going to pay attention to candle formations that happen out there. Do we see some kind of reversal signal in the market? If we do, that tells us we'll see a retracement and or a bounce, one or the other. And that's why we do these things. Now we're going to take a look here at the Euro Japanese yen. Now, this is really important as well. This last night, if I didn't cover it already, this made a perfect 0.618 Gartley sell pattern, and I mean right to the T. Yesterday morning's newsletter, I indicated to our clients out there that we ought to see the euro yen move up to the 141.26 level. That's exactly what took place yesterday evening at 5:30 as the Turkish government was, or the finance ministers were announcing their plans for bolstering the lira out here. Nonetheless, let's take a look at what and now this is made it's made a 100% move of a move on that point. Remember, there's 5 outcomes of any Gartley sell pattern. This has now made 4 of those. The first outcome is a dead cat bounce, a 0.382 retracement. The second outcome is a 0.618 retracement. The third is 0.786. Well, it's made all of those. The fourth is a 100% move of a move. That's often where you run into some significant resistance. That's why we're paying attention to it. The fifth ultimate is that it actually set up the C point of an A to B equals CD down. So that level here is 139.13. We are not down there. The actual number is 139.13. We're not down there just yet. In fact, as we were coming into the session here at that we're in right now at 9:30, that did form a bullish engulfing candle. You can see after making this move out here, if you're watching us on Tiger TV, after making that move, that 0.618 Gartley sell, which also happened to have a nice 1.618 expansion, after it began the move down here, which was at 4 o'clock this morning, you can see nothing but red candles. Now, just because a candle's green, that does not mean that it's bullish. But now as we're coming down into this 100% move of a move area, we did get our first bullish candle. Of course, it was also in the extreme oversold condition out here. However, if we do see some additional confirmation, and all we really need with regard to confirmation is during this next 30-minute session, which is at 10 o'clock, so we're certainly going to see that. All that we really need is not to see it close inside the Euro Japanese yen below 139.53 or 139.55 right now. So we're going to come back and we're going to check in on these charts here. And what we're looking for is a determination as to whether or not we're going to see some kind of additional bounce here in the marketplace out here. So that's why we are doing this. Now, inside the ES Mini, and I'll take it one step further, this is for intraday trading out here, and this is to help you whether you're long or you're short the market. So I'm agnostic as we speak right now. I am not in a trade. in the ES Mini. I was, by the way, in the long trade in the ES Mini and was kindly taken out by having my exit in place. I wasn't anywhere near a computer, and that was last night, and I did have to say, thank you to the Turkish government for going ahead and doing what they did, because I had an exit at 1800. The ES Mini went up to the 1801 level out there, and so that was a beautiful thing. That's why when you get into a trade, you want to have both sides covered out there, because you can't control what the markets are going to do. All you can do is control your trade. Now, inside of the ES Mini out here, one of the other things we want to be paying attention to is you can see this little descending price channel. That is coming off of the highs out here that were in about 7 o'clock in the evening on January 22nd. That's the red diagonal lines that we see going down across my screen out here. So on any kind of bounce, and we did see that the ES Mini broke through that level at about 4:30 yesterday afternoon. So before even Turkey came out with their news in the marketplace. Now we want to be watching for here, and this applies to if you're short or if you're long. If we see the ES Mini get back up above this rising price channel out here, that'll tell us that we've got a market here that wants to bounce. To what level, I can't tell you just yet, but it'll tell you that, all of this market pressure that we saw with the moves down to the downside after making these 100% moves, and now in the ES Mini, perhaps giving us a signal and breaking through that. In fact, I will tell you what I'm going to do if the ES Mini breaks above this descending price channel. I'll actually go ahead and take a long position, and I may have to do it while we're on the air here, but that's what I would be looking at doing. So let's go to Rich in Orlando. I won't be able to do it while I'm on the phone with Rich, but that's okay. Rich, thanks for calling. Thanks for holding. How are you this morning?
Doing real good. It's kind of raining cold over here in Orlando, but we're doing well.
But we don't have ice, right?
No. It's nothing compared to up north.
Yeah, exactly. You wanted to. Last time we spoke was a couple of days ago. You were in the energy sector trade, which I said, that's a weak sector. That's a sector you'd want to be in. Are you still in that trade? Is that what you're calling it?
I'm still in the ERY, and I fully expected to see this whole thing kind of fall through the bottom this morning. But it seems to me like there's an awful lot of support. So now I'm thinking that maybe the ERY side of it should be closed out, and maybe we'll take bounces in play here and try to take advantage of the ERX or the XLE.
I'm with you on so the question becomes, the first question would be, when you got into the trade, is your outcome? I know it's to make money, but from a timing standpoint, how are you trying to time these trades? Are you intraday?
Pretty much short term. I'm looking for the move is what I was looking for. I mean, I was trying to do it on a short, but I was looking originally here for like the 20 on the ERY. I keep moving it up. Originally, it was like 23.50 is what I was looking for originally. Okay.
And so you got your outcome, much like I got my outcome last night of 1,800 on the ES Mini trade out there. And what I always like to do is...
my problem is I didn't take it. So I'm still in it. So, I mean, it's like I could take it and, don't be greedy, take what you wanted and move.
Absolutely.
It looked like then it's like, well, wait a minute, this thing looks like this thing's in the move, so maybe there's a little bit more in here, but it's gotten to a point I'm not sure that that's not just being greedy.
My belief at this stage is we have more downside move in the marketplace. But in between that time frame, I'm actually looking for a market to move higher, maybe into Thursday, tomorrow afternoon.
So you're thinking that's short term? Just a couple days.
Yeah, I'm not thinking that. Yeah, that's my initial thinking at this stage. Yesterday played out according to script. My script was that, and I had written in my newsletter on Monday that we're going to see a bounce here within the next few days. Now, it took until yesterday for that bounce to actually begin in the marketplace. And there were enough signals out there to indicate that. This morning, in taking a look at the market and watching it push lower, that's why we're paying attention to those 100% moves. But again, those aren't 30-minute charts that we're looking at out there. Yesterday's bounce on light volume, is enough to say, okay, we truly could be forming the B to the C leg of an A to B equals CD down. I won't really know much until I see how the market responds to the Fed information. And there were actually much better signals the last time that the Fed came out in the marketplace as to what it wanted to do. If I was to take a look at what the market is signaling this time, it's saying that it eventually does want to go down further. In the case of the ERY, it looks like to me, it still has further upside action. I think the energy sector is still pretty darn weak out here. But that's, there is never ever anything wrong with taking profits.
Right. No. I agree with that.
And
my bigger problem is not so much taking the profits. I've got a compulsion then to, okay, if we're going that way, then to go into something else. And then my thought would have been to go into the ERX. And that's really where my Achilles heel is. It's like
so now the thing there, let me see if I can do this while I'm on the air here real quickly. This is going to take just a moment if you don't mind bearing with me. I'm going to put my market analyzer on the screen as soon as I get the right template loaded here. And because you're short term, what I want to do is we're going to take a look at real short-term trading out here. So I think this ought to do it. And what I'm going to do is I'm going to put up we're going to take a look at the sectors inside the S&P 500. So I'm just going to load that. I'm just doing it offline here, and then we're going to put it up on the screen. So now what I'm doing here is this is a little market analyzer tool, Rich, and this is showing us This is showing us each of the sectors inside the S&P 500, and it's showing us on 3 different time frames. So we're taking a look at a 120-minute time frame, a 60-minute time frame, and a 30-minute time frame, because this would be your ultimate day trading type tool to understand what's going on from a trend standpoint out here. Okay. And if you can hold on through the break when we come back, we'll take a look at this, because really what I'm suggesting is if you were going to take a bounce trade, you would look for the strongest versus the weakest out there. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We got the Dow off 120 right now, 105, I should say. It's trading out at 15,821. S&P is down about 10 points, trading at 1782. We're going back out to Orlando to Rich, who's in a short trade inside the energy sector using one of the 300% ETFs, I believe, the ERY out there.
Correct.
So Rich, with regard to if you were going to take a look at a long trade, what I have up on my screen here, I've got a little market analyzer tool that helps me to understand the real what's going on trend-wise, and this is being updated, every second while we're taking a look at it. And what this shows me, if I take a look at the upper portion here, it shows me right now the two strongest trending areas. You've got the healthcare sector on a 120-minute signal, so that's the XLV. I think that the 300% has an ETF there. I think it's called CARE or something like that. It's not the most liquid. I think it only maybe trades around 60,000 shares a day out there. But that shows, on a daily trend, there's some possibility. Certainly on a 120-minute right now, it's got a nice bullish crossover, so something that I would take a look at. So that would be something to look at. The material sector shows some promise as well. That would be the XLB out there. With regard to the energy sector, I would say that you would be better. I would say those two sectors right now maybe show the most promise, but then maybe you might want to just take a look at the index trade as as your trade, and
like
whether or not you take. Go ahead.
Like the Qs or.
Yeah, like the Qs or the SPYs or, the IWM, one of those, if you're taking a look at a potential short-term bounce trade out there, because I'm not exactly getting the clearest of signals that it's just something to consider. That I would throw out to you. I don't know if look, I don't want to take you away from your successful trading out here. I just don't know if flipping back and forth. If you're going to do the energy trade, go and really study the charts of ExxonMobil, Chevron, Schlumberger.
That's what bothered me, is that they all seem like, I expected, again, that they would have all kind of fallen through their bottoms, but they seem like they're bottoming out here with lower volume. And so that would sound, that's sort of the purpose of the call.
Yeah.
That's exactly that. If they would have started falling through their bottoms or have higher volume, I'd have felt more confident that it's going down from here. But it looks like it's bottoming out and wants to bounce. The question would be how big of a bounce there would be if there is a bounce.
Yeah, there's nothing really bullish about the Exxon Mobil chart. It's made its consolidation move when it got up to that 101 area. You know, the next bullish area inside Exxon Mobil comes back and touches the 93-ish range, where it attempts to get back into the consolidation. But with regard to the candle formation out here, you had that nice little down thrust on January 24th. That might have been when we talked. I can't recall. But the candles here are just trading with inside the body of that candle. So it's not giving you a bullish sign.
No, it's not giving you a bearish either, which is what's bothering me.
Yeah, it's more bearish than bullish. Okay. I would say on ExxonMobil. I cannot make the bullish case here just yet for ExxonMobil with regard to the way that it's trading today. With regard to, the other side is just, maybe wait till 2:30 before you do anything else.
Okay.
I mean, that might be even the safer, better call, and book some or all of your profits.
Yeah, that's always a challenge for me. But I agree. Thank you very much,
all right.
Steve. I appreciate it.
Okay, thanks so much for calling. Folks, if you are off to start your day, have a wonderful Wednesday. Thanks so much for joining us. Hopefully you'll stay tuned, and we'll pick up, and we'll catch you in about 8 minutes or so. Otherwise, I'll talk to you first thing in the morning. Have a great day, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.